What is going on, my friends, and welcome back to another video on the channel. Well, in today's video, we are going to be going over Bitcoin specifically, as things are starting to shake up, and I am expecting this thing to continue towards the downside for the time being. And as that does happen, we are getting some indicators that show that in the short term and midterm, we could very possibly see another correction and pull back to the mid $20,000 levels. And so, of course, for that reason, I want to explain to you guys my reasoning and the two scenarios that could play out and exactly what I would be doing in each one. So of course, with that said, let's go ahead and let's get straight into it. So let's talk about the better of the two scenarios here, okay? The better of the two scenarios is that we get a bit of a relief rally back up towards $39,000 to $38,000 before eventually continuing towards the downside, okay? Now let's talk about why this is a possibility and exactly how this could play out and how we could take advantage of a move of that nature. Now, the few reasons why I think this is a possibility is one, because of the macro structure that we are in now. As you can see, we have created this descending wedge pattern here in which every time we've bounced off this bottom side support, we have seen quite a strong move to the upside. Now, considering the fact that the moment we lost this trend line here, we saw the bulls just absolutely step in and start to buy at large, it shows that there is liquidity below this zone. It shows that this is a strong level of support. And considering the fact that we recovered back into it, confirms that this is a strong level of support, giving us a clear confirmation again that we are within a descending wedge. Now, generally speaking, when you do see the bottom of a descending wedge, you will more often than not get a stronger push to the upside. So considering the fact that we did visit the bottom side here, one could say that it is a possibility that we do see a push towards the upside here. Now, not only that though, one thing we can see is that as we did come to the bottom side here, we created what could have been seen as a bearish pennant, in which we saw the downtrend, we saw these multiple candles creating a triangular pattern, and more often than not, actually, we will get a break to the downside. But considering the fact that we did get the break to the upside here and a successful backtesting of support, it shows that we could very possibly be putting in a bit of a bottoming out pattern here, which would be something of a cup and handle. Now, generally speaking, when we have a cup and handle pattern, what you are looking for is the cup line to be cleared, which is currently sitting around $32,679. In a scenario in which we come up and break the cup line, as you can see, this line right here, then that does put us in a position to see the breakout target reach as high as about $37,000 to $39,000 up towards the top side of our wedge here. Now, this does come off the back of the fact that we did also successfully backtest the 20 simple moving average, which usually is a fantastic sign that we could go into some type of at least short-term rally, as we do start to look to establish that foundation to continue to the top side. So for all of those reasons, things do seem genuinely okay in the sense that we could start to see at least a short-term relief rally back up towards $37,000 to even $39,000. But something I want to point out and something that I think we need to pay attention to is the fact that, one, realistically, everyone is expecting a relief rally. And as you start to see everyone expect a relief rally, more often than not, the relief rally just won't happen because everyone's expecting it to happen, right? But not only that, though. One thing we can see is that we are starting to get too overextended too fast and are creating bearish divergence on our daily RSI. One thing that I've noticed from my studying of Bitcoin is that the daily RSI is one of the best indicators of when we could actually see a breakout or when it is more likely that we are going to see a bull trap that will lead to a continuation to the downside. One thing you can see here is that when we compare the price of Bitcoin to what's happening on the RSI here, the price of Bitcoin is starting to see this ascending resistance, right? We're starting to see the price of the RSI itself just continuously setting these new highs, when realistically within that same time frame, we're not seeing that even remotely happening. Let's just go ahead real quick and let's just turn this RSI based moving average off. But we can see that we're not even seeing a remotely similar setup here, right? In which we are seeing dramatically lower lows, almost exponentially lower lows. And what that means is that our room to the top side is running out. We're starting to lose the amount of room to the top side that we can get before we do get too extended to the top side, and we'll need to see that reset towards the bottom side, right? We could see it happen historically, in which, let's go back to the summer of last year. Or no, what? Let's just go back to this last bounce. Let's make it real easy. Let's talk about January to March, in which back here, we started to put in the low. Boom, and we set the bottom on the bottom of our wedge here. Then what ended up happening is that, let's just get rid of all these lines for a second. And then what ended up happening is we saw this huge move toward the top side in which we weren't realistic. I mean, we set one higher high here, but we were still setting much lower highs and, in a broader outlook, when realistically the RSI had moved all the way up to the 63 position, setting mostly new higher highs in comparison to all of these highs back here, when realistically, again, we were still setting these lower highs here. And what you can see ended up happening is that we needed to see this huge reset in which Bitcoin eventually ended up crashing, 25% before eventually retrying and then running into resistance before eventually capitulating all the way to the downside. As you can see here, we are getting early signs of a similar move in which we are already clearing and setting these new higher highs from what we saw back here, when realistically we're nowhere near those highs on the price itself. Almost every single time that we see this setup, we will see a crash. Almost every single time. And so although there is the possibility of seeing something of this nature in which we do come back up to revisit the $37,000 to $39,000 range, I genuinely don't think that it's going to be anything but a relief rally that is likely to be followed by a revisiting back to at least some of these lower levels towards $27,000 to $28,000 before again retrying back up to the upside here, okay? So I would be being very, very careful, especially while we are below the 20 simple moving average on the weekly. One thing you can see is that this level is important. And as we do lose this level, we capitulate. When we gain this level, we have a tendency, if we can hold it, to see some strong growth. So considering the fact that we are on the bottom side of that 20 SMA, we're on the bottom side of just our, our bear market resistance bands right now, of course, that is a good sign to show that we are nowhere near bullish territory. And that at any given point, if we start to push up here and interacting with these levels, we could very, very possibly get rejected again back to the downside. Consider this a bull trap, and many people will start to get really bitter at the losses that would follow, especially if they got too excited and buying throughout this moment right here, okay? So be very, very careful. We are starting to see things like the RSI or the MACD on the weekly charts turn around, but again, it is the same setup as this last one here, in which we put in that bottom, we started to show signs that we're going back to bullish territory before eventually just getting smashed back to the downside. And I don't want to see you guys getting caught up buying in too early because things get a little bit overexcited, okay? We are getting too extended right now, and unless some amazing news comes out from the Fed, especially in the FOMC meeting next week, I wouldn't be looking for this thing realistically to make too much gains or too hard of gains anytime soon, okay? So pay very close attention. While we're in this wedge, we are not good, okay? While we are below this resistance, we are not good. We will not be able to continue to the top side. We got to break the wedge, and then we got to use that breaking to hold some support, get out of here, and then start to look for growth and setting of new higher highs towards the upside, okay? And of course, I will continue to update you guys as this does play out and as all of these changes do happen, all right? I don't want to be the bearer of bad news. I don't want to be that guy who's just constantly saying, oh, the bear market's here, but the bear market's here, okay? And we need to make sure we are prepared for that. So of course, going forward, if I was going to be looking for trades, if I was going to do a short-term trade, I would be on the lookout for us to clear. Let's go all the way back until our cup and handle is back up here. There we go. I'd be looking for us to clear $32,679. And if we are capable of breaking $32,679, what I'm going to do is I'm going to go over on bookmap quickly, and we're going to take a quick look at what is going on here. Let's kind of zoom this thing in. And what we can see is that realistically, if we do break this $32,600 level, there's really not much liquidity above us, right? There's not too many sell orders that are intact until we see at least $34,000 to $34,500. So I think that there could be a decent trade here, at least a 10-15% trade between this $32,000 to $34,000 level. So there could be at least, let's go ahead and call it, if we pushed up to $34,500, let's go ahead and say that we could see a little bit of a short-term trade of up to 5-6%. If you are going long, of course, and leveraging it, that could be 15-20%. I don't recommend that to anyone new, obviously. So there could be some type of gains to the upside to be made here before we do start to run into this eventual resistance and all of these buy orders that are set around $34.5 and $35,000. But if we are going to, look at this from more of a short shorting standpoint, if we are looking at this from more of a perspective of, okay, well, what if it starts to fall? I would say that if we lose $28,556, which is this clear level of support here, that there is a very strong chance we do start to see this more capitulative move to the downside, in which we could push towards $25,000. Again, if we do confirm that with bookmap, what we can see, let's get this pulled up again. What you can see here is that, let's go back to the downside. There we go. That if we lose that $28,000 level, we have $27,000 to hold us. But if we lose $27,000, realistically, there is not much liquidity. There are not many buy orders until we see $25,000 getting interacted with. As you can see here, once we kind of get 27 off the screen, the next level is 25. Okay, let's go ahead. There you go. Okay, you can see how this kind of lights up a little bit more. Shows if we lose 27 and we start to really push, 25 is very likely in perspective. And I think that is exactly where we would start to go. Okay, so for that reason, I would start to pay very close attention to how we interact with these levels in the short term. If we clear 32,700 first, be on the lookout for a short-term move to the upside, probably followed by the larger bounce to the downside here. Boom, boom. Or if we do lose $28,000, do look for us to come to revisit the bottom side of this wedge, likely towards $25,000 in my opinion, okay? So pay very, very, very close attention to how this plays out, because I think that a lot of people are gonna get trapped in this thing. These are the moments when we start to slow down that the whales will start to take advantage of their manipulation. We'll see bull traps and bear traps over and over and over again. And if you're not prepared for them, you will very likely get caught up within them, okay? So pay close attention to that. And of course, I will continue to update you guys every single day as this does play out. Now, before we do go ahead and wrap this video up, the majority of you do know that as of recent, I have not been focused on microcap cryptos. Realistically, I think the best thing to do is just to focus on Bitcoin, see where it goes, and then play off of that. But there are some microcaps that I think have so much utility that they will survive this bear market. And so, of course, for that reason, towards the end of these videos, I always will give you a little extra incentivization to stick around by telling you guys about new cryptos I'm excited about, or updating you on ones that I have already told you about. And in today's video, I wanted to talk to you guys about one that I have already covered on the channel, being Weiyu, that has found a lot of stability recently. Now, this is the reason I wanted to bring them to the channel, because as we have seen this market falling, a lot of cryptos have just continuously been falling, but Weiyu has done a good job realistically for almost a month straight of just falling flat, maintaining, and then weathering the storm. And I think that is due to the overall utility that they have, bringing investors into the idea to just stay put and to hold, okay? And having enough utility to make your investors just hold right now is the best thing that any microcap crypto can do. Now, of course, what we know is that Weiyu is one that has so much utility, but today I want to focus on their NFT marketplace. Now, phase 1 of the Weiyu multi-chain NFT marketplace launched on April 4th, which featured NFT collections and collectibles on the Solana blockchain. And if we do go ahead and open this up, this thing has been on fire. And we can see that there are so many NFTs being sold here. We can see that even, they have some pretty high seller ones, right? Floor price is sitting up to 133 Solana. They are doing absolutely amazing. Now, kind of within this marketplace as well, they have even more of an ecosystem, which is we launched, they have Weiyu Earn and Weiyu Pieces. Now, Weiyu Earn is one that personally I have used as well, in which you can earn crypto, NFTs, and other prizes while accelerating the growth of the Weiyu ecosystem of partners and projects. You can do tasks to earn points, and it's really just 3 easy steps. You can connect your wallet, earn Weiyu points, and then redeem for epic prizes. And as people have been taking advantage of things of this nature, it's been helping getting Weiyu's name out there. And as they have been doing that, of course, I think that has led to seeing Weiyu's just price maintaining and lying flat and kind of just weathering this storm, especially throughout the last month. So for that reason, if you guys do want, I will continue to update you on Weiyu. Just let me know your thoughts about it if you've invested into it. I personally do hold a little bit of Weiyu, as I think that they have, again, the potential to make it out of this storm. And of course, it will be interesting to see how it does play out in the future. But with that said, that is going to be about it for today's video. And of course, I hope you guys did enjoy. If you did, you can always let me know simply by smashing that like button and subscribing to the channel if you are new. And I will see you all next time. Peace.